Hello everyone, it's Friday and you're watching Within the Frame. I'm Kim Bo-kyung. South Korea is expecting an economic recovery in the second half of the year, and thus authorities here have vowed to focus on promoting exports and business investment. However, many say this slump might not actually ease just yet, given that China's reopening is not having much of a positive impact, and there are exchange rate issues as well, such as a weak yen. Will South Korea really be able to see an economic rebound? For an in-depth analysis, we invite Professor Kim Sei-wan from Ewha Womans University, and we also have Professor Hwagyun Kim from May's Business School at Texas A&M University. Professors, welcome to the show.
Thank you for having me.
Thank you for the invite.
Thank you for being here. Now, first question to our Professor Sei-wan. Finance Minister Choo Kyung-ho on Wednesday said inflation has clearly slowed over the first half of this year. How do you see the country's inflation, and are there any uncertainties that might still affect it?
It is true that domestic inflation is quickly cooling down to 3% level on year after the peak of 6.3% in July last year. But it is expected that inflation will stay around 3% level without a fast decrease by the end of this year. In May, consumer inflation eased for a fourth consecutive month to the lowest level in 19 months at 3.3% on year. But the core inflation, which excludes volatile food and energy prices, rose 3.9% on year. The core inflation is starting to soften, but it is still at high levels and will not cause any meaningful change for a while. This is a major signal that inflation does not quickly decrease in the near future. And the inflation outlook is still highly uncertain because of risks from global oil prices, economic growth, and public utility price increases.
Right, so inflation did slow down, but it is still above the target. Now, Professor Sei-wan, one more question. Mr. Choo also pointed out that the job market has remained strong over the first half. What does this say about South Korea's economy?
Domestic labor market is improving at the market-wide level. If we take a look at the unemployment rate, which is the most well-known barometer of labor market, it decreased down to 2.7% from the peak of 3.6% early this year. That means in 5 months, the unemployment rate dropped by 0.9%, which indicates a still robust labor market amid slowing economic growth. But it should be noted that we have different labor market temperature over different age cohorts. The job increase was led by the people in their 60s and older, which offset declines in other age groups. In the same month, in May, young workers between 20 years old to 29 years old, unemployment rate was 5.9%, almost 6%. But the old workers' unemployment is around 2%, which is much lower than that of the other age cohorts. By the end of this year, employment will likely continue its robust trend going forward, led by face-to-face services sector. But there are some risks in the labor market. Recovery in the manufacturing sector is expected to be delayed due to weak exports and weak, still not strong facility investment.
Right, I see. So the labor market is robust, but there are still some risks. Now, Professor Hwagyun, South Korea's economy is seeing other difficulties as well, such as a drop in exports. Why is it seeing such prolonged sluggish exports?
I was interested in similar questions. So I looked at the data from the Korean customer services for the last 10 years, or about a decade. And there was some very big consistency in terms of the countries that Korea earns most of the surplus versus like the deficits. And the countries that the Korea has big positive surplus are, not surprisingly, US, Vietnam, Hong Kong, India, Turkey, and some European countries. On the other hand, the negative side, the deficits are Japan, Saudi Arabia, Qatar, and Kuwait, Russia, and these kind of countries. As you can see, these are the countries that we usually import oils and raw materials. One country that I didn't mention is China. So the China, for the last decade, has been on the positive side, so that the Korea, as we know, earns a lot of surplus from here. But from like 2020, it was a big negative. So it's almost like from like top 1 to 3 countries that earns a positive to the top, like, the negative deficits, basically, after 2020. So it's a drastic regime switch. Clearly, it has more political and both economic reasons, but given the situations that we are facing with, it's not going to be that simple. The switch is going to be that fast. So probably, the Korea has to look for some other ways to recoup this deficits until the China situation is getting better. And in the future, probably we want to look at the other diversifications, because depending on one country for such big, the one number, I think, is probably risky.
Right, I see. So China is one of the biggest reasons why South Korea is seeing reduction and trade deficit.
Exactly.
Right. Now, Professor Hwagyun, and thus government vowed efforts to promote exports, but some worry that this record low yen is going to have a negative effect. How so, and how should Seoul tackle this problem?
So as I mentioned earlier, one of the countries that consistently giving negative deficit, big deficit, is Japan. It is so perennial that I rarely saw any positive surplus exporting and importing with like a trade with Japan. And I also look at the products and then the electronic parts and some of the electronic items, and also chemical materials and things like that are the big stuff that Korea purchased. And Japan purchased from Korea some agricultural products as well as some other IT stuffs. So as you can see, this is actually really the perennial persistent problem. So if it is not that easy to fix within a short amount of time, this weak yen probably is not a bad thing, right? Because you can purchase these items at cheaper prices. So on this side, it's actually a positive. It's not bad news. Worry, I think, is about, because Korea and Japan have some overlapping projects, that the products that they're competing, selling other countries. If the weak yen makes their products cheaper, so maybe the other countries may just swing from Korea to Japan in terms of purchasing. So that's probably the concerning part. So it's just my casual observation, but when I live in the US here, I see more and more Korean cars, just on the road nowadays, and the tendency has been pretty steep. So I think it's going to be a big test now when the Japanese cars are getting cheaper. Will just the U.S. consumers and others will switch to Japanese cars, or because of the better reliability and better design nowadays, if people will just keep purchasing the Korean cars, I think that's going to be the main sort of thing, thrust. And on other sides, I think the products are not that overlapped nowadays. So I think the effect is not going to be that severe. So the car, I think, is going to be the main part.
All right, I see your point. Now, up until now, we have been talking about difficulties that South Korea economy is facing right now. But Professor Se-wan, according to the central bank, South Korea's consumer sentiment was at its highest in 13 months in June, showing that people are quite optimistic that there is going to be a mild recovery in the economy. Is such optimism valid?
Korean economy is declining, actually, more than expected this year. But one thing positive about Korean economy is that households consumption, which covers 60% of total GDP, is recovering slowly. That is also reflected in consumer sentiment index of Bank of Korea. Slowing inflation and post-pandemic activities recovery has seen Korea's consumer sentiment reach a 13-month high in June. The composite consumer sentiment index lifted to 100.7 in June. It was the first time that the figure broke 100 points since May last year, and was the fourth consecutive monthly rise. A reading above 100 in consumer sentiment index means optimists outnumber pessimists. But the cost of dining out remain still high. Projected rise in public transportation fees, electric power, and gas are keeping the inflation expectations still high.
Right, I see. Now, Professor Hwagyun, before we move on to the policies in other countries that could affect South Korea, I'd like to ask you this question. South Korea's growth outlook for this year is expected to come out next week, and many forecast it to be trimmed yet again. How do you expect it to be?
It is still uncertain, clearly. And the one that just came out, the industrial activity, actually was positive. It was a bit unexpectedly positive boost. So it's an important part of the growth outlook. So I would revise a little bit more toward positive side, but still there are a lot of uncertainties in terms of growth, the potentials because of the export, because Korea is certainly very growth export driven country. Many of these forecasts actually are around 1.5. So government probably is going to revise downward to 1.5 or somewhere in between, like 1.5 and 1.6. Nice thing, or some silver lining, I think, is because these are relatively like a low bottom. So if there are certain, the resolution of uncertainty for the next 2 months or something, especially in terms of semiconductor chips or the international trade tensions and war situations, I think it probably can go better than 1.5 and go back to like 1.6 or 7 originally planned or the estimated. But at this stage, I think a conservative estimate probably is 1.5%. So yes, it's a little lower than we originally expected.
All right, I see. So although there is silver lining, we'll have to wait and see how it goes because there are a lot of uncertainties. All right, now let's also take a look at how the economy and policies in other countries could affect South Korea, as I mentioned before. Now, Professor Hwagyun, first on China. Profits at industrial firms in China declined more than 18% on year for the January to May period. This means tumbling post-COVID-19 recovery, right?
I think so. So clearly some of the worries that the economists and people actually talked about seems to unravel. So the demand is not as strongly recovering as people originally expected. And also the trade tensions clearly have some effect because at the end of the day, China is also, despite the size of the country, it's still a developing country. So they focus a lot on exports. So clearly the export, I think, has been reduced. So that affects the firm's profitabilities. And also their credit market is not so good. So clearly there are some defaults and bankruptcies going on. So the exact statistics not quite as available as other countries, but still I think that's probably what it is. And of course they try to they improve things by doing the more aggressive monetary policy easing, but we have to see.
Right. So though we could say the impact of China's reopening is not as much as we have expected it to be, Professor Sei-wan, China is still expecting to achieve a 2023 growth target of around 5%, saying the second half economic growth will be higher than in the first half. How valid is this?
Of course, as Chinese economy goes up, so does Korean economy because the two countries are still highly intertwined through a complementary industry structure to each other. Actually, according to KDI's report, which is government's largest think tank, 1% additional Chinese economic growth raises Korean economic growth by 0.2%, which shows the high correlation between the two countries. Beijing recently said that China is still on the track to reach its annual growth target of 5% on year. And growth in the second quarter was expected to be faster than it was in the first quarter. China's economic grew by 4.5% in the first quarter, better than expected. However, subsequent data have pointed to slower growth. But international economic institutions like World Bank, IMF all recently raised China's economic growth forecast for this year to up to 5% level. So I would say uplifted China's economic growth will give positive momentum to Korean economy growth through rising export to China.
I see. Let's turn our eyes to Washington as well. Professor Hwagyun, earlier this month, the Fed froze its benchmark rate, but it hinted that 2 further rounds of rate hikes would be delivered within this year. How is the economic situation in the U.S. right now, and what do you expect the Fed's decision is going to be?
Well, the recent statistics release say market is good, and also the labor market seems to be good, and then GDP is also strong. So I think economy is not bad, and the stock market seems to be reasonably doing fine. Mm-hmm. Some say it's even a bit of greedy mode. So the Fed is probably going to increase 25 basis points this July, and the Fed Watch data also, based on the Fed futures, are also showing that around like 88% chance that it's going to increase 25 basis point. What people are talking about is afterwards, will it be the end or will they increase one more time? Clearly, the Fed's worry is from the back in like late 70s and early 80s. There was like this big M-shaped type of, the episodes of the inflation. So they worry about the second hump. What if that happens? So they try to be preemptively targeting interest rate higher. Worry is clearly the banking sector. And also they don't worry too much about the consumption sector or labor market. So it's going to be a last minute decision. But at this stage, the July one seems to be almost a consensus of 25 basis points. But the next one, I think, is going to be very uncertain.
Right, I see. So we would have to see what happens whether this rate hike trend is going to continue, but high chances that we'll see 25 basis point increase for next rate setting meeting. Now, Professor.
Precisely.
Right. Now, Professor Se-wan, how about BOK? I mean, it is going to have rate setting meeting in July. What kind of decision do you believe it's going to make?
That is a tough question, Bo-kyung, because the situation changes over time until Bank of Korea's interest rate decision in July. If we take a look at Korean economy as a whole, domestic inflation pressure is weakening, but economic recovery is weakening too. So Bank of Korea wants to put higher priority on economic recovery and labor market recovery. As Professor Kim just talked about, in summer, U.S. Fed is expected to raise its key interest rate by 0.25%. Then the key interest rate gap between U.S. and Korea would be 2%. This much key interest rate gap is something not experienced by Bank of Korea before. So over 2% interest rate gap between U.S. and Korea, there could be something unexpected situation like capital outflow by foreign investors. But I would carefully say that Bank of Korea will leave its key interest rate at current level in July at 3.5%. But they will try to raise the key interest rate in August by 0.25% when Fed raises its key interest rate in July.
All right, I see your point. Now, I'd like to ask many more questions to our experts, but unfortunately, this is all the time we have for today's edition. Thank you, Professor Kim Se-wan and Professor Kim Hwagyun, for your insights. We really appreciate it.
Thank you very much.
Thank you.
Thank you. All right, that's all for Within the Frame tonight. We'll be next Monday with more in-depth stories. Thank you for watching. Enjoy the weekend, and goodbye.